The most expensive financial decision most people ever make costs them absolutely nothing. No bad trade, no risky investment, no market crash, just waiting, quietly, patiently, for the right moment that never arrives. And by the time they realize it, decades of compound growth are permanently gone. My name is Aniket. If you've been waiting for the right time to invest, hit subscribe, because this video is going to make that wait very uncomfortable. Here's what waiting actually looks like in real life. Market is at an all-time high. You wait for it to drop. Market drops. You wait for it to stabilize. Market stabilizes. You wait for a clearer signal. Market climbs again. You think you missed it, and you're still waiting. Meanwhile, the market returned 40% since you first started thinking about investing, and you have zero of it. Not because you made a bad decision, because you made no decision at all. Here's the truth that should bother every person who is still waiting. There is no right time to invest. There never was. Every single moment in financial history has looked risky from the inside. The Great Depression looked catastrophic. The dot-com crash looked like the end of tech. The 2008 crisis looked like the collapse of the entire financial system. COVID looked like civilization stopping. And every single time, the people who invested through the fear built wealth. The people who waited for clarity missed it. Now here's what most people never calculate. Waiting has a cost. And because that cost is invisible, it's the most dangerous kind. Here's the math. $5,000 waiting on the sidelines for 6 months while the market returns. 8% annually. That's roughly $200 in missed returns. Sounds small, but that $200 missed at the start of a 30-year investment journey compounds into roughly $2,000 by the end. From 6 months of waiting, multiply that across every hesitation in a lifetime, and you're looking at tens of thousands of dollars in compound growth that simply never happened. The market didn't take it. Time did. And here's where it gets really interesting. Because most people justify waiting by saying, but what if I invest at the top and it immediately crashes? So let's look at the actual data. Research on the worst possible investor, someone who invested a lump sum at the absolute peak of every market cycle for 40 years, found that even with perfect bad timing, this person still significantly outperformed someone who held cash waiting for the right moment. They bought right before the dot-com crash, right before 2008, right before every major downturn, and still came out dramatically ahead of the person waiting in cash. Because time does the heavy lifting, not timing. Here's why crashes don't actually hurt long-term investors. A crash only damages you if you sell. If you stay invested, a crash isn't a loss, it's a discount. Every month you invest during a downturn, you're buying more shares at lower prices. When the market recovers, which it has done after every single crash in history, without exception, those discounted shares produce amplified returns. This is why experienced investors don't fear downturns. They understand them as the best buying opportunities available. So what do you do instead of waiting? 3 moves. Move 1. Start today with whatever you have. Not next month. Not when it looks calmer. Today. Even $50 per month invested consistently beats $500 invested at the perfect moment over a long enough timeline. The habit matters more than the amount. The start date matters more than the market level. Every month you delay is a month of compounding permanently lost. Not delayed, lost. Move 2. Invest on a fixed schedule every single month. This is called dollar cost averaging. When the market is high, your money buys fewer shares. When the market is low, your money buys more. Over time, this smooths out volatility and removes the single most dangerous thing from your investing: emotion. You don't watch the news and panic. You don't wait for dips. You invest on the schedule every month without thinking about it. Move 3. Automate it completely. Set up an automatic investment on your paycheck date. Money moves before you can second guess it, before headlines can scare you, before life redirects it. Automation beats willpower every single time. And here's the proof. Automated investors almost universally outperform active decision makers because they never panic sell during downturns and they never stop buying when prices drop. Now here's the part that should permanently end the waiting. The world's greatest investors cannot consistently time the market. Warren Buffett cannot do it. Goldman Sachs cannot do it. The most sophisticated hedge funds on the planet with real-time data and entire research teams cannot do it consistently. Studies consistently show that professional active fund managers underperform simple index funds over long periods. Not because they're bad at investing, because timing the market is genuinely impossible to do reliably. So what makes any of us think we can do it from a phone app while watching the news? The right time to invest was yesterday. The second right time is today. And the most expensive time, the time that costs the most, is whenever you're still waiting. Here's your action right now. Open your investment account. Set up an automatic monthly contribution. Whatever amount makes sense for you right now. And let it run. Don't watch it daily. Don't react to headlines. Don't wait for a dip. Just start. And don't stop. Because the market rewards one thing above everything else. Not intelligence. Not timing. Not research. Patience. And the investors who build real wealth aren't the ones who found the perfect entry point. They're the ones who started and never stopped. If this video finally pushed you to start, hit subscribe and drop a comment right now. What month and year are you starting your investments? Because naming a date makes it real. And making it real is how it actually happens.